Hey everyone, Bill Constantine, Freedom Wealth TV. And yes, I've got my Jim Cramer look going on, but here's the question. Did Warren Buffett, maybe the number one investor of all time, the Oracle from Omaha, Nebraska, multi-billionaire, one of the richest men in the world, known as the number one investor and founder of Berkshire Hathaway, did he sell all the airline stocks today? Did he really do that? Let's find out. Jim Cramer says Buffett's sale of the airline stocks make him very concerned about the near term. I've been very concerned. The market's been went down to about 18,500 on the Dow. It went back up to almost 25,000. Now we're just a little under 24,000. But what's going on with our economy? So as many of you know, I own a company, Freedom Wealth Services, been doing this for 25 years, teaching people how to guarantee their income, take away the risk, take away all the fees, or most of them anyway, take away most or all of the taxes. So what about this Wall Street roller coaster? Most of the time it's pretty good, right? Maybe 7, 8 times, every decade market goes up. But what about 2020? Like, comment, subscribe. What do you think 2020 is going to look like? You think it's going to be flat, down, up? Like to hear your thoughts. So here's what Jim Cramer says. I think they very much are a microcosm of a big chunk of not the U.S. economy, if not the world economy in some cases, as he said. The billionaire investors said Saturday that Berkshire Hathaway had sold all of its airline stocks because of the pandemic. Not some, not most, all. Major airline names were down sharply in early trading after Buffett's announcement. And let's see what Jim Cramer's got to say. Let's play a couple of minutes right here for you.
And Warren Buffett this weekend, and his discussion, very candid discussion about the airlines. If the airlines are fundamentally changed, what that really says is, in Buffett's eyes, what that really says is there are a lot of industries that are fundamentally changed. I keep coming back to that moment. What was Gary Kelly said to us? Well, if there's nothing to go to, why should the airlines do well? Had he said, look, I have to stick by the airlines because there's going to be a recovery and they're the ones that are most oriented, I might have influenced my thinking, but I felt like he verified a lot of what David and I are hearing, which is that, guys, please, if you think that we're just going to come back, you've got it really wrong. And maybe they're doing some they're doing some under-promising. But then you layer it on with the president, who is so, I believe, over-promising. And I'm not fake news. I'm just listening to every single CEO, with the exception of Moderna, that really believes in the drug industry that we can do vaccines at scale. So I feel like that Buffett's overview on airlines really does make me very concerned about the near term.
Yeah, and as a backdrop, of course, Buffett has a long history in having his thinking evolve when it comes to the airline business. U.S. Air back in the 90s left a rather sour taste in his mouth about that. He came around to them in the last 5 or 10 years, and he talked about what he called a mistake over the weekend. Take a listen.
The airline business, and I may be wrong, and I hope I'm wrong, but I think it changed in a very major way, and it's obviously changed in the fact that the 4 companies are each going to borrow, perhaps an average of at least 10 or 12 billion each. Well, you have to pay that back out of earnings over some period of time. I mean, you're 10 or 12 billion dollars worse off if that happens, and of course, in some cases, they're having to sell stock or sell the right to buy a stock at these prices, and that takes away from the upside down. And I don't know whether 2 or 3 years from now that as many people will fly as many passenger miles as they did last year. They may and they may not. But the future is much less clear to me about how the business will turn out through absolutely no fault of the airlines themselves.
So I thought that was...
Well, there you have it. Warren Buffett You got to pay back those loans, and we're not confident if people are going to be flying as much, and he dumped the airlines. So what does that mean for the rest of the market? Is this the beginning of more to come? I'd like to see your comments there. Like, comment, subscribe. CNBC's Jim Cramer said Monday that the legendary investor Warren Buffett gave no hope near term in his annual shareholders meeting on Saturday with his sale of airline stocks. And I just said all. Buffett's overview on airlines really does make me very concerned about the near term, Cramer said on Squawk on the Street, and he's usually pretty positive and overly optimistic, in my opinion. The billionaire investor said Saturday that Berkshire Hathaway had sold all of its airline stock because of the coronavirus pandemic. The conglomerate previously had investments in United, American, Southwest, and Delta worth roughly $4 billion. Airlines have been one of the major industries most impacted by the pandemic, which has slowed global travel to a trickle. Many airlines negotiated loans from the federal government and have been cutting flights across the country in an attempt to stem losses. The world has changed for the airlines, and I don't know how it's changed. I hope it corrects itself in a reasonably prompt way, Buffett said during the meeting. Cramer said that he viewed Buffett bailing on the airlines as a sign that there were serious issues in the broader economy. That's the key there. So there was also an article a couple of days ago, Market Watch wanted to share this. Don't be fooled, a 40% drop could hit by next year after this bear market rally fades, veteran economist warns. So a lot of you, have spoken to me. A lot of you have taken the plunge and said, you know what? Let's put a wrapper around the 401k money, the IRA money. I always ask, how much money can you really afford to lose? If you're close to retirement, if you're in retirement, the number 1 and 2 causes of death in the United States is not COVID. It's still heart disease and stroke. I mean, people, die of heart attack and stroke. And what happens here is when people are continuing to rely on the Wall Street roller coaster, and when you're in your 30s, 40s, maybe even 50s, you're saying, no problem. If it goes down, we'll just buy it lower. We'll just keep buying. We'll just keep buying it and it'll come back. But when you start entering your 60s and 70s, even your mid to later 50s, how much can you afford to lose? We had an 11-year run, folks. We have a pandemic and it may come back, and I'm not an alarmist. I'm actually really an optimist, right? So I just think that we're probably going to see this virus come back in the fall and the winter when it gets cold again. And we have a little bit of a bull rally, maybe a bull trap here. Maybe it'll come back just a little. But when this hits again and we got to start quarantining again, and what do you think this economy is going to be? So anyway, here's this article said this looks like a bear market rally similar to that in 1929 to 1930. That's a quote. Don't be fooled by the recent rebound in stocks. The investment scene is beginning to resemble the 1929 market crash, early 1930s Great Depression. And that comes from Gary Shilling, a longtime economist and president of A. Gary Shilling Company, and delivering his gloomy take in the recent op-ed published on Bloomberg News. Okay, so this looks like a bear market rally, quote unquote, similar to that in the 1929 to 1930, with an additional 30% to 40% drop in stocks to come as the deep, not shallow, deep global recession stretches into 2021. As you can see from this tweet, Shilling has been sounding this alarm for a while now, rallies on hopes the worst of the coronavirus is over. To me, it's like, okay, there it is again. Today, the damage to worldwide economies is yet to unfold and stocks will collapse. That's a big word. To new lows. That was on April 7th. There were solutions, guys. Number one, you can go in cash, of course. You can buy other things. You can buy real estate, but this market hits. I think the real estate market follows. There's going to be certain income programs. I know a lot of people don't like that word, annuity, But there are some annuity programs out there giving guarantees, contractual guarantees from multi-billion-dollar companies and even companies that manage over $1 trillion. They guarantee it dollar for dollar. And you can participate on the upside of the market. So if the market does go up, that's great. You participate. But if it goes down, you don't participate. There are many different types of annuity programs, depending on how old you are, how much money you're putting in, depending if you want income, if you want growth. We're independent, so we have access to all the different programs. If you have an advisor that's an expert in this area, you might want to consult with them. If you don't have one and you want to reach out to me and my team, be happy to give you a free consultation and see what's appropriate. But the big question is, how much can you afford to lose? He explained that while many economists are looking for a V-shaped rebound to deliver a sharp recovery in the second half of the year, he remains much more skeptical, regardless of how much stimulus the government pumps into the economy. Bear markets that accompany recessions last about 11 months, far longer than the recent slump, Schilling wrote. The gigantic monthly and fiscal stimulus employed so far, with more to come, are unlikely to offset the massive disruption of the coronavirus pandemic. Think about it. When stores open up, restaurants maybe at 25%, 50% capacity. Are you going to be spending money the same way? Are you back to being employed? If you were employed and laid off, you have access to your 401k. Are you going to be dumping your 401k to pay the bills? Are you going to be traveling the same way? Are you going to be eating out the same way? Are you going to be making sure you save money in safe places? So anyway, the pandemic is likely to be the most disruptive financial and social event since World War II, with equally long-lasting consequences, Schilling wrote. Citing stark unemployment numbers, many will no doubt restrain spending, which I just said, in future years to rebuild savings, especially since the crisis caught them at a time of high debts and short financial reserves. So that's that, my friends. Love to hear what you think. Do you think this is going to be another depression? You think we're going to climb out of this quickly, or you think we're going to finish strong, or do you think that we're in for some tough years? So many of my listeners, I know you're in your 20s, 30s, 40s. We have special programs for you, by the way. If you're younger, you can create a tax-free pension. Have a zero floor. You don't have to participate in the Wall Street roller coaster. You can participate in the upside of the market, often with a cap, and then you can grow your money tax-deferred, tax-free. But even when the market goes down 10, 20, 30, 40% plus, you don't have to take it in the face, right? The worst you can do is a zero. That's what we call zero becomes your hero. But if you're in your 50s, 60s, you could still participate in a tax-free pension, which I'll leave a link in the description. But for those that are very close to retirement or already in retirement, maybe you don't even need that money, but you'd like to leave a legacy for your family. You'd like to have maybe some extra money for long-term care needs, potentially. There are special programs for you as well. So if this type of content is of interest to you and you like financial freedom, you like freedom wealth topics, welcome to the channel. I just encourage you to click that subscribe button. Go ahead and like, comment. Let me know what you think, right? Is the market going to stay flat, go down, go up? What are you thinking? As always, take action, leave a comment, reach out to me. I'll have links in the description. Again, everyone, we'll see you in the next video. God bless you and your family. This is Bill Constantine, Freedom Wealth TV. See you soon. Stay safe.